and welcome to the 18th edition of the India Business Leader Awards jury deliberations. I'm Shireen Bhan, and it is a very proud moment for us to bring to you the jury members of the 18th IBLA. The theme this year, which was the theme that we're taking forward from our budget programming, is the road from resilience to resurgence. What will the actionables need to be? Without further ado, let me get our jury into the conversation. The budget is over and done with, and today the MPC has delivered a policy that is along expected lines. So two of the big economic events at the start of the year on the economic calendar are out of the way. What does the road ahead look like? What is the outlook? Uday Kotak, to you first, sir. Let me start by asking you about what you made of the commentary that came in from the Reserve Bank Governor. Do you expect a pause, or do you expect the tightening to continue?
Shireen, I think the policy was on expected lines, but probably the feeling was that it was a little more hawkish than what the market would have expected. And it follows the Fed chair's interview last night, which again was perceived a little more hawkish than what the market expected. And you saw the US 10-year rates go back to 364. Here as well, I think withdrawal of accommodation continues. There was some expectation in some market participants that we would move to neutral. And also the inflation projections for FY24, last quarter of March 2024, is still predicting an estimate of inflation at 5.6% for that last quarter. Therefore, 6.5 is roughly about 90 basis points higher than the expectation 1 year later. Therefore, my personal view is it remains 6.5 for a while. I don't think we see reduction in interest rates, and then
further tightening, though.
I think you have to follow what the RBI says. At the next meeting, they will say they are data dependent.
Well, let's get a quick dipstick survey here. We've got the top bankers of the country here with us. Mr. Khara, what do you make of it? Do you also think that it was more hawkish than what was estimated?
I do tend to agree with Uday, but at the same time, I think we had all expected that 25 basis point increase will be there. It was already factored by the market. I would say that the kind of enablers which they have put in now in terms of, when it comes to users of UPI, even the international players who are coming, international tourist traffic, they can also use UPI when they are coming into the country. Apart from that, securities, borrowing and lending, more so for the mutual funds and the insurance company, will make this particular market more deeper, which was the need of the hour. And I would say that, yes, as far as the penal interests are concerned, there will be more order in the industry. So I think these are some of the positives which probably will lead the industry and the economy to the much mature stage.
Okay, so we'll come to the positives in just a second. But Zareen, what do you make of it? A pause from here on, or do you believe that the tightening is likely to continue?
I would agree with Uday. I think the tone was much more hawkish than what the market expected, and I think some statements that suggest that they're still worried about core inflation. And I think the non-farm payroll data also of US, that has also surprised a lot of people, and with dollar strengthening and to defend the rupee also, I think the interest rate hike is something that could be possible.
Could be possible. Which camp do you belong to, Vaidyanathan?
Well, three of them have spoken, so I don't want to add much to it. But I can just say that the fundamental drivers that is driving the economy in terms of being underserved and, the digitization, massive movement on that, all that will keep moving the economy. And frankly, whether the interest rate is this or 20 pips below or above, as long as the economy is continuing to climb at 7% per year or real rates, I think we're all good.
Are we all as good, Sanjeev Mehta, as we hope that we're going to be, especially in terms of consumption? As rates continue to move higher, the RBI governor did allude to the fact that core inflation continues to be very sticky. What's the impact likely to be on consumption, and what do you sense from here on?
The rate of inflation will go down. But if we really have to give a fillip to consumption as in volume growth, then we have to see commodity prices go down substantially, which would then result in corporations like ours passing the benefit to the consumers. Then the consumption would come back.
And you're not at that point?
We aren't at that stage. Save and except a commodity or two like the palm oil, where the prices have gone down and the companies have passed on the benefit to the consumers. In rest of it, they are significantly ahead of, say, the 10-year median. Or if you compare to, say, 2020, many of the prices are at double the rate of what this was 2 years back.
So while you might not be able to do price cuts, do you need to hike prices any further at this point in time?
The rate of price hike would be substantially lower, but what you would see in the price growth would first be coming in from the price increases that were taken in the second half of the last year.
So since we're talking about consumption and we're talking about prices, TV Narendran, let me ask you, the big X factor in all of this is, of course, what China does and what that is going to mean as far as commodity prices are concerned. We've started to see some visible impact of that. What's the expectation?
I think that's the elephant in the room. China is expected to come back more strongly than most people thought. Let's wait and see over the next few weeks, because there's a lot of pent-up consumption in China. Just like we saw in India because of COVID restrictions, a lot of consumption didn't happen. If you see what's happening in China over the last few weeks, travel is really moving, not just for Lunar New Year. There are a lot of people coming into China, traveling out of China. So there are a lot of parts of the Chinese economy which are expected to rebound because of the COVID restrictions being removed. Secondly, I think they have done a good job of fixing most of the property issues that they dealt with, that they had. And so if China comes back strongly, if you really look at what triggered inflation a few years back, it was a post-COVID recovery and supply chains couldn't keep up. I think supply chains have got fixed a lot, but the recovery in China could be something which drives inflation back again.
Well, how much is it likely to drive prices higher? That's good news for you, so you will have a bigger smile on your face. But how much is it likely to move prices higher by? What's the expectation?
So, Shireen, it's yes and no for us, because we are also a buyer of commodities like coal. So we are watchful. We are also watching energy prices, gas prices, all that impacts our costs. But if you look at the commodity I represent, steel, prices have gone up about 10-15% in the last 4 weeks.
Yeah. Well, Anish, consumption, this was the big sort of budget that tried to do its part as far as capex was concerned, credit and consumption. At this point in time, what's the outlook really as far as consumption is concerned?
We are seeing very strong consumption across all our sectors. In auto, it's driven by products that we have. Surprisingly, the farm sector has held up very well. And the growth in farm equipment, in tractors in particular, has been far higher than what we've expected this year. And that augurs well for India overall. And as we see across other sectors in hospitality and logistics and real estate, we're continuing to see very high demand. That's really hasn't come down.
So, this is what I want to link. Sanjeev Mehta, I want you to come in on this. Here's Anish Shah saying that actually rural demand as far as their tractor segment is concerned has been very, very strong. But that hasn't been the case as far as FMCG is concerned. How do the two then reconcile?
Yeah, there is a fundamental difference. Tractors are not owned by farm hands. Farm hands consumption is driven by wages. Yeah, and it is not that the growth is not there. If you look at the full year 22, we are still talking about the top line or the headline growth still being positive even in rural India. But for the kind of price increase we have seen, which has been unprecedented, it's also not surprising that the consumers have titrated the volume.
Prabha, and I want to come to you on that. What are the trends that you're seeing? Because there was a lot of expectation on what it would mean in terms of down trading and so on and so forth. Many companies have in fact innovated as far as pack sizes are concerned just to be able to beat inflation. What are you seeing at this point in time, and how are you mitigating some of these risks?
So what we're seeing actually is very similar to what Mr. Mehta said in terms of the rural consumption not coming back as fast, and certainly amongst the rural poor, we are seeing consumption being under serious pressure, particularly in categories that are not seen as fully essential, and a choice can be made. What we are seeing at the other end of the spectrum is premium urban consumers are actually driving market demand, and premiumization continues to grow apace. So it's kind of like a two-phased market. And in terms of pack sizes and down trading, we're not seeing any significant shift as yet, more just a curtailment of consumption where money is tight and wages are not coming back to meet the inflation the inflation that's happening in their baskets. But it will come, and we are seeing a little bit of green shoots, so hopefully it will come as we go on. And obviously there is always more opportunity at the premiumization end of the spectrum as far as India is concerned.
Absolutely. Mr. Kotak, I want to address one of the challenges that we could potentially face and link that to what is happening globally. And you did allude to that in your tweet. While I think there is consensus that at this point in time, the risks domestically are few and far between, the risks globally are the ones that we need to brace ourselves for. You talked about the foreign debt aspect and how that makes some companies perhaps more vulnerable. And that's what I wanted to understand. If the Indian banking system doesn't have a systemic risk at this point in time, what are some of the global challenges that you are worried about?
See, I think, and I see a lot of corporates here, they should be borrowing more from Indian financial institutions. They're borrowing too much from outside. I'm sure my banking colleagues will agree with us.
Mr. Khara, you want to come in on that as well?
No, I think market is probably guiding them to borrow more from the Indian market. No, global markets are in trouble.
I believe that, and I'm not going into any specifics, I think this is a time for Indian financial sector to build its capacity, both in terms of underwriting skills as well as scale. And I do not believe global financiers necessarily have better underwriting skills, but India has to hone it, and its own financial sector should be able to do thorough diligence and get its underwriting right. If we do that, and we need to build a whole host of capacities in India so that corporates feel that the first port of call is to borrow from India. And the risks of global borrowing is that a person sitting in New York, London, Zurich, Hong Kong, Beijing, wherever, may not understand the Indian dynamics as well and is very much focused and impacted by media reports globally. And decisions can be taken more superficially without going necessarily into the facts of the case.
You know, just wanted to take that point forward. You said the decisions can be taken based on headlines, so to speak, and a superficial assessment of those headlines as opposed to a deeper understanding of the dynamics. What's the risk of that at this point in time? Do you believe that there is a outflow risk or a India premium being cut risk at this point?
See, I've had chats with many investors, and you know, investors are like different animals in a jungle. Each have a different strategy. So there are a set of investors which are saying top-down India, getting carried away by the headlines. But there are many bottom-up and smart investors who are asking the question, which is deeper, that how are Indian company valuations? And will this give us an opportunity to invest? And of course, the most common comparison is, oh, China is much cheaper than India. And therefore, they're looking at relative valuations, but they are looking for value. Therefore, investors play different games, and different investors are different. You cannot have one size colors all. And for every seller, there could be another global investor who says it's a great buy time.
Get you in on this aspect as well, on how global investors are viewing the India story at this point in time, and what you believe will be the India advantage that can be leveraged.
Yeah, I would say by and large, when people come from different parts of the world and they come to India, the general optimism in India is right now probably very high. I think the budget delivered a very good message in terms of government's focus on macroeconomics. The investments in infrastructure and the multiplier impact of that, fiscal deficit, so on and so forth. So I would say by and large they are very excited about India. They want to invest more. And I'm talking more about not so much people who are investing in the markets, but much more about private equity, venture capital, foreign direct investment, strategic investors. So they are, I think, and some of the things that have happened, some very bold decisions over the last maybe last year and a half, including the one on Vodafone right now. I think that's also opening up the minds of people to say, yes, if the government really wants, they can move, they can move things. So overall, very positive. And Shireen, the main thing is from a manufacturing standpoint, I still think that the investors, unless they're in very, very specific sectors, if people are looking at large tracts of land, if people are looking at some labor issues and how they resolve that, if someone wants to export, a couple of $1 billion from India to $3 billion, the red carpet and the path for that is still not clear. So how the central government and state government work together to make that happen, I think that will be very, very important. Because
So you're saying there's still a question mark there?
it's not a question mark. I would say there is still ambiguity to say, okay, how do we do it? Suppose I want to manufacture something, textiles or toys or some, more labor-intensive industries, and I really want to hire 10,000, 20,000, 30,000 people. Are there enough examples for me to say, okay, or someone can help me guide through the whole process and say, how do I get 100 acres of land? Can I create a building structure around me so that people can work? What are the labor laws? Will people work 2 shifts, 3 shifts? So those kind of really details, and that's where I think if we can work and create some templates of that, then that will be very useful.
And Zareen, I want you to comment on this, because this really is being positioned as the big opportunity, as our big moment, as global supply chains diversify and India emerges as a credible alternative, especially from a manufacturing perspective. To Rajiv Memani's point, are the pieces that we need to put in place, the building blocks that we need to put in place there yet? Are we closer to an inflection point today, to your mind?
I would say we are closer to an inflection point. Maybe if I look at 3-4 years back compared to that, I mean, when I went to US on my road shows, almost every MNC was very interested in India. To that extent, I would say we are really at an inflection point. Having said that, we shouldn't underestimate our other countries who are really also wooing a lot of the FDI, like Vietnam, Thailand, Indonesia, which are also becoming, and the whole ASEAN bloc is becoming quite a big beneficiary of the China Plus One. Having said that, I think our PLI scheme has been really, and the low corporate tax rate has been really attracting foreign direct investment in a meaningful way.
Well, so that I think is the unaddressed part of the challenge and the opportunity. So the challenge presents itself as an opportunity as well. Adar, let me come to you now, because the expectation is that we will continue to move higher when it comes to the pharmaceutical as well as the vaccine manufacturing story. We have, of course, positioned ourselves as the global hub of the world. But how much of the quality concerns, and there have been many in the last few months, how much of that has cast a shadow on the industry at this point in time, as well as the way that the industry is being viewed globally?
So there are these few isolated incidences which, of course, the regulator and others will take care of. Wherever you look at anything that's gone wrong in any industry, despite having the best regulation, highest level of regulation, you always have a few players who may not comply or may have some issues, and even that is yet to be investigated. I don't think there's a final conclusion on whomsoever had quality issues, was it product related or not. So I won't comment on that. But largely speaking, India's image, especially with the COVID crisis and before that even, as the pharmacy of the world, is very, very strong. Whether it's at Davos or any of these global events, you see the interest that we have. But I'll tell you one or two things that we need to do to continue that momentum, and it's very critical, especially now that China, Korea, and the African continent are also investing and having a lot of capital flow there to make pharmaceuticals and vaccines. We need to press on with the reforms that we have suggested to the government. Government's been very proactive. We've already made a lot of changes, like, the stockpile permission, so you don't lose 9 months between, clinical trials and research and then building up the vaccine stock or pharmaceutical stock. Reforms, and also building our supply chain in India. Especially the pharmaceutical industry has been dependent on APIs and imports from China. You're seeing a lot of investment now being made in India by domestic players to be totally self-reliant. And I think that's really going to change the whole way in which things happen. Of course, prices may go up a little bit as a result, but that's initial. And then, competition will take care of that. So I think these two things are very important for us to continue. And, to answer your point, I don't think anything's going to affect the India image, one or two of these incidences which then get blown out of proportion.
Mr. Kotak, since we are talking about the roadmap from resilience to resurgence, I want to understand from you, we've already discussed in detail, great detail, the announcements that have come in from the budget and the potential impact of those announcements. But if there's anything on the unaddressed reform agenda side, especially from a financial sector perspective, what would you like to prioritize at this point in time to really have that multiplier impact? And it could be outside of the financial sector as well.
So
First, on the financial sector, if you look at the budget speech, the finance minister has talked about a need for review of financial sector regulation as in the budget speech, and has said the time has come for us to be looking at the entire financial sector regulation and review the impact and reassess the need for some of that regulation. So this is in the budget speech. So I think this is clearly on the agenda of the government, and I'm sure they must be talking with regulators to put a process in place to get feedback and make appropriate changes in the financial sector regulation. I think that's extremely important that in the year when India is at G20, India benchmarks its own regulatory framework to the best in class, and we have to evaluate where we stand in the G20 in terms of our regulation in any sector, including the financial sector.
So where do we stand?
I think that is an assessment which must be done, and I'm sure that is maybe the driver for this particular point which the finance minister has put in her budget speech, and it's something which will be hopefully acted on in the current year, and revisit regulation. So what makes sense, what doesn't make sense, and she has said across all regulators, all financial sector regulators. So I think that's a very big change and an open mind which the government has demonstrated in this year's budget.
But in your assessment, specifically from a financial sector point of view, from a regulatory perspective, what do you believe requires change?
I think it's a long list of things which we need to
Give
discuss.
me the top
and
three. Give me the top three.
I think the top three clearly is how is it that India is going to build capacity for the size of its ambition as a significantly larger economy. So I think that would be item number 1, 2, 3. Therefore, every action we take must be consistent with building India at scale, and the financial sector should be able to meet and address the requirements of India across the board.
Vaidyanathan, let me get you to comment on that as well. Financial sector and outside of that as well.
On this point that Uday just made, what is the capacity India is creating? Let me talk about it from a retail point of view, because it's a very important part of the story. So today's India's retail book is about retail personal credit alone is close to about $600 billion. That's about 50 lakh crores. On an economy, let's call it 300 lakh crores, which is about say 16-17%. Now, as in India moves toward the US kind of numbers, say 92%. US, by the way, is a $19.6 trillion consumer credit on a $22 trillion economy. That's like 95%. So as we migrate this path, one thing India has got right early on in the game, while still very small on consumer credit, is that our ecosystem of credit bureau, which is a very good guardrail, the cash flow lending, the UPI-based collection, India has developed that and credit assessment through digital channels. So India has got those guardrails right before we started the credit journey, which should give a lot of comfort to all of us that we are not, hopefully not going to have a huge credit cycle along the way.
We've addressed the issue of credit, we've addressed the issue of consumption. Let me address the issue of capex. And I want to understand from each one of you what kind of appetite you have at this point in time to go out there and actually do big ticket capex. Anish, I'll start with you. Across each of your businesses at the Mahindra Group, how much risk are you willing to take? How bold and courageous do you feel today?
So Shireen, even as we look at a potential global recession, we are doubling capacity in our auto business today. We are halfway through that. In the next 12 months, we will be at double. We are increasing our farm capacity by 60%. In a holidays business, we are looking at putting up ideally another 25 to 50 resorts. Our life spaces business is looking at townships over large tracts of land. Logistics, we made a couple of acquisitions. We want to do more. So we're actually going out there in a very bullish manner today, and looking for acquisitions, looking for more capacity, looking for growth to scale up our businesses.
TV Narendran, do you have the appetite for more, or are you still digesting what you already got?
No, I think, Shireen, even in a challenging year like we've had, you look at it, we've spent more than 20,000 crores in India, 12,000 crores on inorganic growth and 8,000, 9,000 organic growth. I think there are two parts to it. One is private sector capex will come back as demand grows, profitability grows, and balance sheets gets repaired. But I also think there's a lot more we can do to get more out of the capital which is already invested. And I think that's been an experience over the last few years. Whether it's private sector capital through the IBC process, you pick it up and unlock more value from it, or public sector capex like more recently we acquired Nilachal, a plant which was shut for 3 years is now running at full capacity. So I think there's a lot of capital already invested through the government or through private sector, which can also be far more productive, in addition to new capital going in.
Prabha?
I think what's happened over COVID is certainly our supply chains have got more agile, more resilient and more frugal. But I do think that capex and investment will come as the demand picks up. It will certainly keep pace with it because the longer term India story is absolutely in place. So.
Other?
No, so I mean, we've made investments and acquisitions both at our new campuses and also backward integrating by acquiring, you know, the raw material suppliers, syringe manufacturers and things like that, because I think that's very, very critical going forward, because we've been looking at, you know, the way in which all countries are going through this self-reliance investment cycle, which is what's closing the kind of doors to the kind of free flow of raw materials and materials without duties and other taxes that was happening. So we've earmarked about $2 billion, of which we've spent already $1.5 billion in capex, and also we've earmarked another $500 million to acquire a few more of these sort of companies outside to support the raw material side. So, you know, I mean, the capex for all these new vaccines and things anyway is something which we're doubling down on, and we had already invested about $1.5 billion during the COVID crisis, obviously, for that capacity. So we're taking our capacity now to 4 billion doses. Which makes it, you know, very, very...
And international acquisitions to ensure safety of your supply chain, that's the focus.
Well, that, and we've made some in India as well, you know, with some partners from Germany, so we're doing that now.
Zareen, what's the sense that you're getting in terms of lift-off as far as private capex is concerned when you talk to people?
So it's, I think, very industry and sector specific that we are seeing. Wherever we're seeing capacity utilization becoming higher, we're seeing definitely capex happening. A core sector, real estate, clearly data centers, lots of industries where we are seeing a lot of greenfield investments or brownfield happening. There are some industries where clearly capacity utilization is less than 75%. Where I think the moment it crosses that level, we'll see capex coming in.
Yeah, yes, utilization varies across different sectors. Mr. Kotak, how much appetite do you have at this point in time to go out there and do big ticket or small ticket acquisitions?
We are very open and always looking out for the right opportunity. And Shireen, back to the earlier point you made, which is about how do we build scale and investment in India. What I feel is happening is there's a lot of activity at the startup level, at the really small early stage, and there is pretty good investment by the big guys. I think what India has to focus is the middle corporates who have to be a core part of the building of India. And it is there, I think, we really need to focus. India must fix the missing middle for scale on a sustainable basis.
But, you know, what do you believe is the need of the hour at this point in time in being able to fix that missing middle? Because this is not something that's new, that's on the table as a challenge or as a problem.
I think to a certain extent, consolidation amongst the bigger players has happened significantly. And let's look at 2 or 3 sectors. Telecom. You're down to maybe 2 or 3 players.
Now 3.
You look at airlines, you're effectively down to 2 players.
Yeah.
You look at steel, 2 big guys are really running away. Where is the larger middle India to go out there and compete, becoming middle from small and middle becoming large so that many flowers can bloom? So we have startups, we have the big guys. We got to create the middle for building a sustainable and a resilient India as you started.
You know, that's an important point that you make, Mr. Kotak, and let me get TV Narendran to comment on this. You know, to his point that we've now got these monopolies being created across different sectors. We've got, you're smiling.
I wouldn't use that word.
Okay.
We wouldn't be making losses if there was.
Dominance. But to his point on how do we encourage the missing middle to flourish as well?
No, I think that's important, but we also need to look at industries which have to compete globally, need global scale. There's a Chinese steel company which produces more steel than all of India put together. Right? Bao Steel is bigger than the steel industry of India. So if you have to compete with global players, you need scale. So you need the big guys to also scale up because India should be competitive, Indian industry should be competitive. But I agree with Uday, because there are Also, there's also a very big role for the smaller players. I mean, there's no big manufacturing economy on the world which doesn't have a strong MSME sector. They are world-class MSME companies. They may not be big in size, but they're world-class in quality. I think Germany is a great example. Korea is a great example. Italy is a great example. So I think we need to, I agree with Uday that we need to build that capability. The big companies also need to play a role there because a lot of them are part of the supply chain of the big companies. So there's a lot of work that we need to do.
Rajiv Amani, to the point, and this is going to be critical as we get to that 20 trillion or 26 trillion by 2030 target that you put out. 2047, sorry, 2047 target that you put out. React and respond to what we're hearing.
No, I think it's absolutely right. But I would say that today, if you are a MSME, global volatility has gone up. If he has to go and take loans, none of these gentlemen who are here are going to give loans unless you have personal guarantees. So a lot of people are very hesitant to give personal guarantees. For them to approach and raise equity from capital markets, I think the level of compliance that one has, the kind of processes that one has to go through is very difficult. Is private equity, why is startup doing well? Because there is global funding like venture capital, private equity that's available. For the mid-sized sectors, it's not available. But having said that, I think what I'm seeing is that a lot of Indian manufacturing companies, the larger ones, when they look at their procurement list, they look at what are the items that they're importing. And more people now understand that the mood of the government is very clear, that they want to encourage more and more manufacturing. So at least what we are seeing, that even in the MSME space, companies are looking at trying to see how can they domestically manufacture more and more, and that's where we are seeing MSME investments that are coming in.
And there have been some announcements in the budget, including one which corporate India hasn't taken very well to, which is to pay the dues to MSMEs legitimately, which they ought to.
No, I think they've taken it well. I think there are some issues which I think are not that significant, that, if you make provisions at the end of the year, how will you treat that and everything else. But I would say, I think most of corporate India, I think the tone of corporate India, at least in my view, has changed from where it was 5-6 years back to now. Most people have a much wider view apart from their own industry. They are trying to see what's good for the country and how they want to drive that piece.
He's lobbed the ball back in your court, Mr. Kotak, in terms of coming out there and nurturing and supporting the 1,000 flowers to bloom. What are you doing about it?
My position is clear. As a banker, we would love to dramatically increase financing of the middle, okay? Because that's where we really see an opportunity. And as long as we can manage our risks and the returns, we think there's a huge opportunity. On the larger players, as you asked me the question in the beginning, in any case going overseas, they think Indian banks are too small for them. So where is the question?
Do you see that changing? Do you see that changing though now?
Depends on them. Ask Narendran, ask Anish, ask other corporates you talk to.
He's lobbing the ball back in your court. Now, Anish, I'll get you to start responding to Mr. Kotak.
So on this, we borrow from Indian banks only. The service is great. The rates are actually lower than what we can get from outside, given the credit rating we have. The only thing is we don't borrow too much, and we've been generating lots of cash, so we've been repaying whatever little we borrowed. So therefore, we don't count in the sort of list of borrowings as such. But on the middle, that's a very important point. And that's also up to the industries. Because if you look at the auto and tractor industries, we've developed a very large ecosystem. And many of them have become large corporates in their own right, not just MSMEs. And they are supplying globally as well. So we've created a very strong ecosystem in the industries that we are in. And I think that will happen in many of our industries as we go forward. In commodities and services, yes, you may have larger players, you may have more consolidation. But as we start thinking of manufacturing in India, we will start generating a lot more MSMEs that will graduate beyond that.
Let me get wrap-up comments from each of you. And Vaidyanathan, I'm going to start by asking you, respond to, of course, the points that were made here, but also the single biggest risk as well as the single biggest opportunity that you believe we ought to focus on.
To Rajiv's earlier comment, and single biggest opportunity according to me, in that context, this concept of cash flow financing has been repeated so many times that people are almost not taking it seriously. But it's an extremely important thing. So today, you see an entrepreneur's bank statement, money in the bank. Cash flow is not real cash. Cash is like what is money in the bank. So you're able to see the money in the bank, almost like an X-ray of it, process it, and give a credit and you can give credit without assets, but it's as secure as taking assets as security. So my view, therefore, is that the biggest gap that India had for 40, 50 years, that entrepreneurs, small entrepreneurs don't get credit, because of the availability of digitization and cash flow evaluation, is going to dramatically change, which is the reason you're seeing that the SME credit, which had the highest NP among state-owned banks historically, like 14%, 15%, now it's not even 2%, 3%. So that's a very big opportunity I see for going ahead. I think this is massive for India. Large corporates anyway get a lot of credit, no issue there. It's the small and the medium, which I think is like a big deal. To give you one number, the MSME credit in India right now is about like 15 lakh crores. Our own estimate is that 15 lakh crores will touch 30 lakh crores in a safe manner in the next 4 or 5 years.
So almost double over the next 4 or 5 years.
Yes.
Prabha, the big risk that you're bracing yourself for and the big opportunity that you're working towards.
Actually, Shireen, they're both identical, because if we can get penetration and consumption in rural India, that's the biggest opportunity by far. And if it doesn't come, that is truly the biggest risk as well to our business. So it's probably two sides of the same coin.
And I want to add one wish list, so to say. I mean, I've never succeeded in this wish list, but I'll ask it again. In the sense that the corporate tax rate today for everybody is very fair. 25% is pretty attractive. But small entrepreneurs should not be at 25. I've always been arguing that we need a progressive tax code, even for corporates, so that small entrepreneurs start paying maybe 5-10% tax rate at that marginal. It will make a big difference to the cash flow, will big difference to lenders' ability to lend anyway. It will change the game.
Well, now this game-changing idea will probably have to be considered by the Finance Minister for Budget 2024. Big risk, big opportunity, TV Narendran.
Opportunity for me is the digital infrastructure that India has built, and I think that's bringing in more formalization of the economy, more access, etc. I think we can leverage that more and more. Risk to me is a little bit more on what happens post-China. Will oil prices go up? Will our energy bill go up? Our current account deficit is not in a great shape. Will our exports pick up because if the rest of the world is struggling? So I think we need to watch the current account deficit and oil prices.
Rajiv Memani?
I think energy and geopolitics, I would say, are the two biggest risks. I think opportunity, and I'm sort of going back to in the industry that I belong to, I would say the speed at which digitization is happening in India and also globally, and India now becoming the central point of that, I think that's really becoming a massive, massive opportunity. I mean, if we were to just talk about ourselves, this year we'll probably be hiring more than 40,000 people. And I think that we'll probably have more than that next year. So that opportunity...
So 40,000 2023 and double of that, or
no,
close,
40,
or
yeah,
more than
yeah,
that,
yeah,
more than
hard
that
to
next
say,
year.
yeah. So and that's really the way technology is transforming at a massive space, both here and more so, you know, what's happening outside India and the quality of work that's getting done in India.
Zareen?
I think on the risk, it's more the global volatility. To my mind, it's the unknown for a lot of us. In terms of opportunity, I think it's more how do you leverage the digital infrastructure to do better lending and reduce your cost to serve. To my mind, that's the opportunity.
Anish?
The risk is inflation, commodity prices and oil. The opportunity for India and for us is manufacturing excellence. How can we create a manufacturing hub in India and supply the rest of the world?
Mr. Kotak, you had warned us of the risk of inflation, the wolf of inflation. I remember pre-COVID, and you've been sort of reiterating that risk, and we've seen what's happened since then. At this point in time, as you look at your dashboard, what's flashing red?
I think the good news is I'm struggling between whether we are in a story of Goldilocks or Cinderella. Cinderella has a problem of midnight. Goldilocks is Goldilocks. So we are in a good place. But the question which always comes to me from a risk point of view in my mind is, I think about current account deficit of a country as a profit and loss account. And India has had that challenge of having a negative profit and loss account for as long as I can remember. For a true resilient India, we should reach a point where we are not dependent on external financing for meeting our imports. And that is something which is very critical. And if geopolitics and other challenges happen, a current account deficit means we need dollar checks to fill our hole. We have to correct that over a period of time. But it doesn't seem to be correcting itself over a long period of time. So that is one thing which always bothers me. On the positive side, I think the finance minister mentioned in our budget about how per capita income. You know, we like to talk about India becoming the fifth largest economy. That's great in the big picture, but we have a denominator challenge. We have 1.4 billion people. Therefore, when you divide it, our per capita, as she mentioned, is 1,97,000 rupees, which is $2,500. The opportunity for every one of us is how can we take this $2,500 per capita and not absolute GDP to $10,000 per capita. That is the single biggest opportunity for us to achieve in the next period as we look about
Next period means what?
It depends on what rate you compound. That is it. And what rate you compound and to what extent your currency holds. If your currency keeps on also depreciating, per capita $10,000 is a moving target. But we must work towards a goal of a per capita target in addition to absolute GDP target. So Rajiv, next time you have a 2047.
Our report was on per capita.
On per capita, I have to say.
$2,500 going to $15,000 in 25 years, and that's India's biggest opportunity. Even if it's 12,500, it's fine.
I agree.
That is India's biggest
India has to not only move from the lower end of middle income, probably we are just below the lower end of middle income, to above the middle income, because we have to get beyond the middle income trap as well. And that is something which I think is one of the biggest opportunities for India and every Indian.
I'm curious, why Cinderella?
Cinderella, because you know, it's back to...
No, because it's a very specific, it's a short time window that Cinderella had to go out there and sort of party, so to speak. So
we are in good times. We just got to make sure it is Goldilocks and not Cinderella.
Well, let India be Goldilocks and not Cinderella. That is the perfect note to end this conversation on. Many thanks to our jury members for joining us here this evening. Thank you so much for your time and for your insights. We will, of course, be back with the winners of the India Business Leader Awards in a short while from now. We keep the suspense going for a little bit longer. But from all of us here on the team, for now, goodbye and many thanks for watching.